Hello and welcome to the general market chart pattern. Today we are going to take a look at US dollar from a long-term perspective. What is the dollar likely to do? Has it topped? Whether it is just a pullback? We are going to take a look at on a monthly chart, a really long-term view, and we are going to identify key market symmetry in this market. Before we proceed, just a caution. This video is for educational purposes only and it is not a financial advice. So what we are looking at is a long-term monthly chart of US dollar. We go back as far as 1992 in the data which we are looking at. What we can see in this is that back in August of 1992, the dollar had bottomed. There was a rally, a significant one. Then there was also a significant pullback. And from there, the March of 1995, dollar just took off and it didn't look back. So that rally lasted about 10 years. So we are looking at um, 1st of September going sometime in July '01, and then there is a double top coming in Jan of '02. So that's why I say approximately 10 years in rough approximation. From there, in January of '02, notice that's when the double top came in, in the month of January. The dollar basically started its bear market. And if you remember, by looking at the stock market, you'll notice that we had a recession going on, which ended sometime in um, '03, I believe, but we'll have to go back and check. For the purpose of this video, we'll just stick with US dollar. But when the US dollar begins to decline, then it means that it's good for commodities. It's probably also good for stocks. It is good for gold. And US dollar declines. These things begin to rally. So the recession ended. Yeah, dollar topped. Okay, so it just went down for quite a long time. So from, let's say, Jan of 2002 right into the financial crisis, April of '08. That's when it kind of bottomed. And then it had like a sharp rally, a sharp pullback, a sharp rally. But it was just a recovery rally. Then a sharp pullback, but it never took out the '08 lows. That's when it really began its bull market in earnest in 2011. And then dollar had a really nice steady rally. What you begin to notice is that from May of 2014, June, May, June, that's when it really had a sharp move higher. And certainly there has been some pullbacks here in dollar. And then in from June of 2021, a really sharp move higher, more like a parabolic move. And guess what? It ended where? At the same amplitude of the rally from 1992, August 1992, all the way to the Jan 2002. So guys, what I'm trying to show you here is that there is symmetry in the marketplace. So in terms of the amplitude of the move, these two moves were very, very similar. And look how the dollar behaved. So what I'm going to do now is actually change this from a bar chart into the line chart, where it's a little bit easier to visualize. You'll notice that some of these peaks and bottoms are not exactly the same, but I think that's the way TradingView is constructing its line chart. Maybe it looks at the rather than looking at the absolute lows or the highs, it maybe does some averaging somewhere. That's why we get a little bit of different picture. That's the reason I showed the bar chart first. So what you can see in here is that After reaching this level, the dollar has had a sharp pullback. It's pretty much at the structural support around here. There was, we also get a level going back all the way to 89. So I wouldn't be surprised if dollar finds some support here and we begin to rally, and then we'll have to watch where this rally will terminate. Most likely at the 38.2% Fibonacci retracement level, but I will update you on weekly basis or daily basis. So and also this rally from 2011, it took about approximately 12 years. So even in time terms, yeah, given a couple of years seems like a long period, but we are looking at really long-term charts. There is a, some sort of symmetry there as well, arguably, but that's debatable. But in terms of magnitude, yes. And also we have this A B C D pattern, a one-to-one projection, which was coming around at the same level. And also we had a 1.618 expansion from this. Let me go back to the bar chart to show you clearly from this high reached here. So there were a number of confluence points coming together around the 113 to 114 level, which meant that this could perhaps be a significant high in this market. So what we see is that dollar begins to decline. So this is September 22, and we see a significant bottom in the stocks as well on 13th of October. Pretty much all the major indices in the US kind of put in a good sort of bottom, which hasn't been taken out yet. So in terms of really long-term picture, it appears that the US dollar has topped, and now we probably begin to see lower US dollar, which means gold prices, other currencies outside the United States could rally. It could also be bullish for the other commodities, including soft commodities, grains, and of course the metals and precious metals in particular. We have already seen a really good rally in gold. We have seen a decent rally in copper. So of course there is the supply and demand side of things, but also these commodities get priced in US dollar terms. So if the dollar is weakening, then these commodity prices could rally, and perhaps this is what we are witnessing at the moment. Now, what I would also like to do is, because this is dollar index, about 51 to 52% of this basket is composed of the euro. So I'm going to also add euro to it, and we are going to see, what we see is that euro is actually just the mirror image of the dollar index pretty much, because it's such a heavy weighted basket in this. So the yellow line we see, excuse me, the orange line which we see is actually the euro market, and the black line we see is the US dollar. And what we see here is that they are they look like a mirror image of each other. So if the US dollar is going to decline, then the euro is going to increase. And this is what we are witnessing at the moment. We have had a sharp decline in the US dollar. We have had a sharp rise in the euro. And now the dollar is at a point where perhaps it could rally a little bit, and we could see some weakness coming in euro USD. So the purpose of this video was to actually show why we think the dollar has topped and why it did, because of the symmetry in the marketplace. And from here, our point of view, unless these highs of 113 are taken out to the upside, our point of view is the dollar has actually topped, which would be good for a rally in commodities, in particular the metals, and also other commodities, and also perhaps good for the stock market. So if you like our analysis and how we look at the markets, please do subscribe to the channel. Also like the video, and smash that bell icon button. That way you will know when the new videos are posted. Thank you very much for watching the video. Good luck and good trading. Bye.